All right, hey there guys, Sam here from TradeDevils.com and TradeDevils-Indicators.com. Well, today I've put together a little multi-part training series here that I hope you're going to get some value from. There's two parts to this. One is it's oriented towards being able to review your trades over the prior week, and then how to get some value out of that practice time. It's something that we all should do. I think to some degree it's a function of how frequently you're trading through the day. So if you're putting on 20, 30, 40 trades a day, boy, that's a difficult process to go through those one individually and evaluate your trades. If you reduce the quantity of trades and just focus on quality, I think you'll find not only will you have a better experience in the market, but your progression in the market, I think, will be more consistent. I have to assume if you're listening to a video here from me, you're looking to improve your results. Maybe you're you're inconsistent, or you're just not making the results or the returns that you had hoped to see, and you're looking to improve. So that's really what the premise of this entire exercise here is to help you in the decision-making process when a trade sets up technically, and then dissecting the clues that the market does give us that would give us confidence to enter the market. Now, of course, there are no guarantees, right? There's always going to be volatilities. Volatility stops are just part of the process. But what we want to do is really focus on the quality of the decision making, and then so my goal here is to dissect each of the decision points. We're going to go back through, as I always do. I'm just going to use the most recent week. I never cherry pick anything. Never any need to. I'm just going to go over some of the criteria here and then break them down one component at a time so that it really sinks into your head, so you can look collectively. So if we're at a moment like this, that you can recognize the opportunity and then track the clues that the market is giving you. So, and we'll go back through, here I'm working off of a 5-minute. We'll go back through the entire week, and I'll show you that if you're very specific about the criteria to enter a trade, you'll find that there, one, won't be 40 trades to take in a day unless you're trading on maybe a 512 or a 230, or I mean, you can certainly overtrade, right? It's a common problem I get from members and customers, that they're not seeing the results. And often some of the first questions that I'll ask is I'm trying to evaluate what the process is, and overtrading is just a huge part of it. So again, I'm just going to go back through the last week here, and then we're going to pick these apart one at a time. I'm literally going to dissect the pivot where a trade presents itself, and then hopefully you can do the same thing. Now, I'm featuring this, the cornerstone of what I'm using for this entire exercise here is our manual back tester, where you can literally evaluate and say, okay, if we reach a moment in time, are the criteria there, and we can just use it right here, is the criteria there for you to enter the market, so that you can go back through and mark these manually and say, is everything I need to make that trade present at this moment in time? And if I did, with a reasonable expectation of what your risk to return ratio will be, what can I practice that? Can I such that the idea being so that if I see this in real time throughout the course of the week, that I can pull the trigger there because I've done the back testing here, and I have a confidence level in what I'm seeing in the market and the clues that it's giving me, enough not to be sure that you're going to have a winner, but enough that you have at least a slight edge at that moment in time, enough to put money at risk. So that's the goal of this. Now, the manual back tester, let's go look at it right here. So don't you hate videos where they make you watch for, I don't know, 45 minutes before you get the price of it? So that's not our style here. So this is the manual back test right here. This is a $199 product. Now, you do have the opportunity to lease this product. And if you want to read and hear, my partner went through a little video of how to use it. I'm going to show you how to use it, but if you want to do a little research, I think this can be incredibly valuable to a trader who wants to work on improving their results. Now, as I said, it's 199, or you can lease it for 49.75 a month, right? That's one option. The other thing, talk about a great product to trial. You'll recall, right? Most of you realize that you get a free 5-day trial of any of our indicators. Boy, do I want to encourage you to do that. Just go back through your trades and evaluate, okay, what were the results, and try to dissect them and try and improve. So that's the goal here. Again, I would encourage you, whether you watch the rest of this series or not, there's no way this can't help you. Right? Again, trial it for 5 days. Draw your own conclusion as to whether or not it's helpful to you. But with that said here, as you go through the charts and those trading decisions, which is what we're going to do here as we review the week, this can be very valuable to you. So I want to encourage you to consider that. Okay, so with that said, let me wrap up here and we'll transition into the meat of the course, or this little training, if you will. And with that here, we'll dive right in. All right, guys, I have here, this is just the last 5 days of trading. This is a 5-minute on the S&P. And I bring this up for just two reasons here, just very briefly. One, just to remind you of the volatility. This is contemporary trading. I mean, it's been this way for quite some time, and it's not likely to change. So the kind of swing depth and height is, I've been doing this for a very long time, and this is just very extreme. I mean, this move from one to the low, and again, it's been this way for a while. It's not going to change. There's approximately 80 points up. Oh, and then we're going to go, I think this is 107 down, right? I mean, this is how it is, right? And it's not going to change. We know now that, I think most of the data would suggest that approximately 95% of all the trading in the S&P in most markets is all done by algorithms. We're never going to know what they're doing. We're never going to have any insight into what's behind them, how they operate. I mean, we're talking about everything from the high frequency guys that are after a tick just hundreds of times a day in massive volume, down to algorithms that are tied to words that someone on the Fed might speak. I mean, there's so much complexity there. We're never going to know. So it's pointless to even give it any mind share, right? It's beyond our reach. Fortunately, we don't need to know. Now, that said, in the premise here of kind of getting back to basics and focusing on quality over quantity, there is one algorithm that has been identified that we can track. We know what it does, and we can track its footprints. So let's just in the context of our back to basics theme here, I'm just going to do a quick review of that, and then we'll dive into the meat of this whole series.